One of the things that people I talk to have realized over the last year or over the last couple of years is that when governments are going to raise your taxes, it's not just going to be raising the income tax. It's not just going to be raising the capital gains tax. They're going to introduce whole new taxes, and they're going to introduce roundabout ways to come in and take more of your money. Today, I'm going to share with you 3 things that politicians around the world are planning to do to grab more of your cash. Hi, I'm Andrew Henderson, the author of this book, available on Amazon, and the founder of Nomad Capitalist, where we help 7- and 8-figure entrepreneurs and investors legally go where you're treated best. Today, I want to talk about 3 different taxes that the government is mulling in mostly Western countries around the world. Those are the kinds of countries that we track because these are the legacy brand countries that just figure, you know what, if people will pay 37, they'll pay 39.6. Why not? These are the countries where the politicians have a large swath of the electorate in their pocket, where they can go out and say, these guys are paying half their money in tax, that's not nearly enough. Now sure, there may be a few random space jet-setting billionaires who aren't paying enough. The people that I'm talking to who are making $5 million a year, $10 million a year, heck, even $500,000 a year, they are paying a lot of money in taxes. They are paying more than their fair share, not only on a percentage basis, but on a dollar basis. They're paying a lot more than the average person, but that's not fit the political narrative. And what I've said is that there are countries around the world, one country in particular I've mentioned is, I have a friend there who says, I don't look in anyone's pocket. And he talked about how people in the country try not to look in other people's pocket. They want to just do their thing, other people do their thing. They have been through some adversity in this country. But that is not the way it's working in the Western world right now. And so if I'm looking at the landscape, if I'm reading the tax journals, if I'm reading the headlines, here are the things that I'm seeing. And the first tax that's being discussed is the retroactive tax. I was reading a big article on a flight not so long ago about whether this is even constitutional in the United States. And the answer was pretty simply yes. The government can pass a tax and say, hey, it's August 1st today. But we're going to go all the way back to January 1st, the beginning of the tax year, or whenever the beginning of the tax year is where you live. We're going to go back to that, and we're going to say, hey, whatever you've been doing in the last 3, 5, 7 months, whatever, sorry to tell you, but we're going to apply this new tax rate. And what this is commonly used to refer to is capital gains tax. So the Biden administration in the United States, they're certainly not the only ones looking at doing this, but they are one of the most prevalent in the news. The idea is that, hey, capital gains tax right now are in the teens or 20s, depending on where you're at. Not only do they want to impose new rules if you're making over $1 million, but we're also talking about, hey, let's get this bill going. And the story was, and I talked about this on Fox Business right before New Year's last year, is Biden, going to, go retroactive? And all the estate planners, all the, wealthy folks were going back and trying to figure out what do I do if that happens? Where maybe the rate is now 39.6, or with this surcharge, even 43 and change. 43% on your capital gains if you make too much. How do you trade in that environment? How do you exist in that environment not even knowing whether the rate is 1 or double that? Literally it's the difference of from 23 and change to 43 and change. I mean, that's pretty substantial. You might change your behavior, but that may not even be possible in some of these retroactive tax scenarios. Now, one of the things that I read talked about how you have to have a certain amount of political capital to get that done. And if you try and pull that in December, when the tax year ends on December 31st, I mean, people are perhaps going to push back against that. Now, if the tax doesn't apply to them, which is something that the United States is great at, where the politicians say, we're only going to make it apply to the really rich people, and the rest of you are getting more free stuff. Hey, maybe nobody cares. Was anybody protesting provisions in Trump's various laws that affected expats? Was anyone protesting FATCA that affected only Americans who lived overseas? No, you didn't hear almost a peep. In fact, for some of those things, I dare you to go and try and find media coverage about some of that stuff. You can't even find it covered in the Wall Street Journal, in Barron's, in anywhere, because nobody cares. That shows just how political this stuff is. And so retroactive taxes, they are apparently constitutional. They can come into place. And so the question is, if you have a business that you're selling, if you are an investor in stocks, if you have Bitcoin, cryptocurrency, what have you, how do you plan? Well, if you're an American, perhaps you want to go down to Puerto Rico. Now, that doesn't entirely solve the problem for any of those categories. It at least stops the clock, as it were, but that's not the exact solution. You could get a second passport. You could potentially push the exit button on the U.S., but that's not going to entirely solve your problem. I mean, how do you have any certainty? Well, what you do is follow my advice that you want to act years too early better than a day too late, because possibly retroactive taxes are coming. If not in 21, they could be coming in 22. And that's just the US. I think other countries are looking at that as well, and more countries will. Another tax trap that politicians are looking and talking about, this one has not gained quite as much steam or may not be quite as possible, but it's the unrealized capital gains tax. And this one's been talked about by a number of billionaires. Mark Cuban was talking about it, and others saying, listen, we don't want to wait to get our hands on these capital gains. We don't want to wait for the new tax to come up. Listen, we're just going to, whether it's every year or whether it's one time, that's been another thing that's been discussed around the world, is the wealth tax. Some politicians say, hey, let's have a one-time tax on wealth. And then more extreme politicians come in and say, hey, let's have a every year tax on wealth, right? Once the door creaks open, it's hard to close the door, especially when people are, that money gets allocated to give other people stuff, and people get used to that. It's hard to stop that. But the unrealized capital gains tax has been proposed by some politicians in different countries, saying we can't just let these people have their stocks go up in value. Obviously, as people in parts of the world are certainly hurting right now. I don't know how many of those are in the U.S. Certainly there are people who are hurting, but it seems like on a global level, the hurt is probably worse in other countries. It's pretty easy for politicians to go out and say, hey, this is something that we want to right the wrong. You have terrible economic policies, and look at what that's done to the stock market. You have inflation. You have low interest rates. All that has had an effect on stocks and things like that has driven the value of people who have stocks, who start companies, who have other assets. Those assets have gone up in value. Things like real estate, due to the pandemic, have gone up in value in many countries, not only in the United States, but look at Dubai, look at Puerto Rico, look at a lot of places around the world. People are buying property, even in Montenegro, near where I live. People are going on a buying frenzy during this pandemic. And so people who have money are making more money. And the politicians just won't stand for that. So they want to find a way to make sure that if your stocks went up, whether it's $100 billion in a year or maybe just $1 million every year. I've even seen stories about how this kind of tax could in fact impact someone who has a couple of apartments that they rent out. Just middle-class people, because the government doesn't want to wait to get that capital gain slice. They could potentially raise the rate and say, hey, you had $1 million, now you've got $2 million, so just send us a percentage of that. And if the asset goes down in value later, well, that's the question that has yet to be unanswered. How do you handle if someone has an unrealized capital gain and then that turns into a capital loss? Does the government send you a check? Do they care? Well, that's the question to be answered. The third tax, the third trick, as it were, is the idea of assumed wealth. So we talked about how governments around the world, and we've been talking for close to a year now about how wealth taxes are one of the big pushes that people are making and politicians are making around the world. Not a lot of them that have been talked about have been passed, in all fairness. I think that the sentiment is still there. And again, I would say better years too early than a day too late. The horse is out of the barn in terms of the discussion. But what I was talking to a gentleman about in Europe not so long ago is he said, where I live, they just assume that you're going to make a certain percentage. And they say, all right, pay us the tax rate on that. And it's basically a de facto wealth tax. And so one of the things that I've told you over the years is I think you'll see more and more taxes. Now, maybe some countries, like in the U.S., will say all of our citizens must pay no matter where they live. People do confuse that to think that, hey, I can't save money as an American going overseas. Some Americans have a very difficult time doing that, but plenty of Americans can legally go overseas and dramatically reduce their tax rate by not spending a lot of time in the U.S. But the U.S. is pretty bold in just saying, hey, you got to live here. Now, this assumed wealth tax, where the government's going to say, hey, we just assume that your money's making a 4% return, or who knows what the number could be. And then they're going to tax you on that. And so if you don't make that return, then I guess you're screwed. That's basically, it is a wealth tax, but they're doing this kind of backdoor approach to where, again, some countries may just come out and say, we're going to just say it. Other countries are going to say, no, 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 we don't have a wealth tax. We just figure, hey, you're successful. You got to be making at least 4% or 8%. So listen, the rate's 40%. Just send us your 3.2% every year, and we'll leave you alone on the rest. So, what if you're a conservative investor and you're not making whatever percentage they determine? What if markets don't do well and you're down for the year and you still have to pay? I mean, how does that work? But that is one of the tricks that we are hearing out of Europe that I think could go in other countries. The overarching trick is the back door, where they're not going to say it. I've surmised, and whether this comes to fruition or not remains to be seen. This is more of a long-term approach, less long-term seeming every day to me. But the idea that the government will come and say, hey, you're a European citizen, we think you should pay a certain amount of income tax for the privilege of being a French citizen or a Belgian citizen or a Spanish citizen or a Dutch citizen. And you can move to Dubai, that's fine, but if they won't tax you, we will. Now, they may not go full-scale U.S. They may not say, hey, here's the rate, pay it. But they might say, we've got a minimum tax. You've heard that in the news, the minimum tax, this time on corporations. But let's say it couldn't be for individuals. You're going to pay 10%. Now, listen, if you live somewhere else where you pay 10%, that's great. But if you don't, you can pay it to us, or you can pay the difference to us. That could be more of a backdoor approach than simply saying all of our citizens are taxed no matter what. And so I think this is kind of an assumed wealth tax where they just figure, hey, here's what you're going to be making, and so we'll base it off of that, is maybe a more devious way, rather than just coming out and saying you've got to pay on your wealth. They just figure, hey, let's just replace one tax with another, and you may make out better. Maybe if you're a crypto trader or a crypto investor and things are going through the roof, maybe you end up well with that one. Others may not. So those are some tricks that I see, again, under the banner of the back door, not wanting to come out and say it, wanting to polish it, wanting to have a certain amount of plausible deniability. Those are the things that you're going to be seeing more of. It's not just income tax going up. It's not just taking the cap off of Social Security, which perhaps is another trick, but it's still pretty aggressive. It's not just raising the capital gains tax rate. These are things that they can do in addition to what already exists. Little loopholes, little sneaky tricks, and I would watch out for them. I would be prepared for them. If I'm not an American, I'd have a residence somewhere else. And if I am an American, I'd have a second passport. So people ask, Andrew, how do I get the most out of Nomad Capitalist? How do I begin my Nomad Capitalist journey? The first thing people do is they start right where you're at. They watch YouTube, they listen to podcasts, they read articles at nomadcapitalist.com. We've spent years creating thousands of pieces of free content so that you can get the vibe from someone who's actually done this, from someone who's actually been in your shoes. What they'll do next, they'll get a copy of the book. You can find it on Amazon. It costs a few bucks, and while it's not going to give you all the secrets, it's going to, again, give you more of the vibe. You're going to learn a lot of the things that I've learned. You're going to learn some strategies you can employ, and you're going to get a lot further in your journey. From there, if you are the 7 or 8-figure entrepreneur investor, you can go to nomadcapitalist.com. You can click Become a Client. We're pretty busy these days, but we have availability to help a limited number of people who want to create a holistic plan, something that I think is so important. So if you want to do that, go to nomadcapitalist.com, click Become a Client, learn more about how it works and how we can help you.